Hey, yo.
We welcome to the program Jeremy Nelson, the partner at Element Wealth. Jeremy, always good to see you, sir.
Always a pleasure. Glad to be here.
Well, we've certainly had an exciting couple of days in the market. November was a dang good month, right?
November was a great month. We had a pretty big bounce back from a tough October. Look, seasonally, end of the year tends to be a pretty good time. It'll be interesting to see if it continues. I mean, today's looking okay so far, but we'll see if it continues through the rest of the year.
But typically, November, December, January, usually strong months for the market, right?
Normally strong months. Absolutely, yeah. Seasonal factors are good right now.
We got the inflation report yesterday, the PCE, the one that the Fed tends to pay more attention to, I would say, than the CPI.
Yep.
And that was positive.
Yeah, we've been in the camp that inflation was going to come down. I remember, a year and a half ago we were talking, and I said, there is an aspect of this inflation that is transitory. There is some of it that is not. And, that's kind of proving itself out right now, that it's still above where we want it to be, but it is, somewhat in control.
What's hard to tell, I think, is inflation moderating because of the Fed's monetary policy, raising interest rates, or are there just a number of other factors, or supply chains kind of returning to normal? Consumers still seem to be strong, and I think that's primarily because folks are working. Unemployment is still
unemployment is still low. Consumption is good. I read an interesting article that because credit card debt is very high.
Very.
Right.
Over a trillion.
And the consumer is feeling pinched from the higher interest rates, the cumulative effect of the inflation. And there was this article talking about how people are doom spending. So think of it like when you have a diet, right? And you're on a diet and you're not losing weight, and then you just crash, right? And you're just like, whatever, I'm overweight, so I'm just going to eat that ice cream or that pizza or whatever. Well, people are doing that from a spending perspective. They're tight, they're feeling financially stressed, and it's just like, whatever, buy now, pay later. I'm just going to go and buy this because it's going to make me feel good.
Yeah,
right.
A lot of that.
So I think that consumption is good, but employment is good, and you're not going to see the Fed really back off until you see a big impact on the unemployment rate. Because they have to finish the job on this inflation. But, overall, thus far, the needle is getting threaded. But there's this one X factor, right? And I still fundamentally believe that a lot of the reason that the GDP numbers are as strong as they are and kind of the economy looks better than the average person is feeling, right? Yeah. The inflation, the average American is feeling this inflation, but these economic numbers look pretty good. It's the government spending, right? There's these massive deficits that are out there, and so when you look at the GDP formula from college, right? Your consumption plus investment plus government spending plus net exports,
which is how
government
GDP's
spending,
calculated.
right?
Yeah, big part of the reason GDP was revised upward.
So you were talking about this a couple of months ago on the show, talking about the $2 trillion deficit. That's a part of why the GDP number is up right now.
No doubt.
And so I feel like there's some stress, but it's not as bad right now as some of the doomsdayers would say. But it's also not as good as maybe the numbers are showing.
Okay, well that makes sense. And it is a good point for the folks to understand is when the government produces these deficits, it's got to go borrow money to accommodate, and that typically means they print money.
Yeah,
they go produce money. And it does the Treasury, and then they go sell bonds to the Fed often, or investors. But the bottom line is you're inflating the currency.
Yeah, and what I'm interested to see is, with the deficits where they are not subsiding at all, only getting, honestly, worse at a time when receipts are good, right, when the economy's doing well. I'm really interested to see what this means in 2026 when the Trump tax cuts expire.
Well, and it's something we've talked about, Jeremy, on the program often, and it's because, it doesn't get a lot of attention right now. Politicians don't like to talk about stuff that's 2 years down the road. But that's a huge deal that's just sitting out there. And we're talking about expiration of the individual provisions of the so-called Trump tax cuts, which means everybody's taxes going up.
Yeah, I mean, look, I was sitting down doing a cash flow analysis for someone that owned an interest in an S corp, and I was showing them in our system because we're forecasting that it's going to go away, right? I mean, we do our forecasts on financial plans based on the laws that are on the books.
Yeah,
and so we showed her. We said, you see this big increase in your taxes? Well, that's the Trump tax cuts going away. So it's going to cost you $20,000 more a year.
Yep. Yeah. Well, I got to tell you, back when I was engaged in acquiring companies, one of the things that we, as an acquirer, the investment bankers on both sides, would express to the potential seller, you may remember this, is the capital gains rate going up 15 to 20.
Yeah.
And I don't remember what year that was, like 14, 15, somewhere in that time frame. And it's like, you do this transaction now, you're paying 15% on your gain. You wait, you're going to hit the hip for another 5%. That's substantial when you're selling an asset like that.
It is very, very significant, right? When you start talking about, not just a quarter of a percentage, when you're talking about 5+% difference,
yeah, I
mean, that's a lot of money.
And we're talking about 5+% on a once-in-a-lifetime transaction.
Yep.
And so that's a big deal. I would like to see, honestly, capital gains go to zero. Now, I know that's not a very popular opinion among a lot of people, but I think if you really looked at what that would mean from an economic perspective, I think we'd end up benefiting with more income.
Absolutely.
Revenue
now,
to the government.
The biggest thing is you kind of run into a short-run deficit.
No doubt.
Right?
No doubt.
And how you bridge that gap. But look, we know that overall the government is less efficient in how it spends money than private individuals and businesses, right? So the more money that you put in people's pockets, the better. Now there is a place and a role for the government. There are things that the government has to do that individuals and private businesses can't. But we can't really seem to decide exactly what those things are. And the reality is that governments across the country have just become bloated, and there's just a lot of inefficiency there. So, but that's what you got a 3-hour show to talk about. That's not my area of expertise.
Here's what we know, though, is that given the fact that we're generating $2 trillion deficits, I just went through this based on a tweet from the president last night who's calling for a minimum 25% tax on billionaires, right? Which they're all been out of shape because, as you know, lots of wealthy people derive most of their income from capital gains, dividends, et cetera, that are taxed at lower rates. We tax income, passive income at lower rates than active, productive income. And that's what they've always called for is to kind of equalize those numbers. But it's $440 billion a year estimated over 10 years.
Yeah,
is nothing.
It doesn't move the needle. And the other thing that they're forgetting is that those corporations are paying taxes.
Right.
If they're profitable, they're paying taxes.
Yeah.
Right. It's just that when the money comes out, that's when the extra tax gets tacked on for the dividend or if they sell the capital gain. So I don't think that our tax system is unfair and that people are not paying their fair share. It's just the government tends to spend too much money and isn't willing to pull back and cut.
That never even enters the equation. Well, the other thing is, since when did we start worried about how much is coming in to figure out how much we're going to spend? If that were the case, we wouldn't have $2 trillion deficits.
Yeah. And look, there are times, look, I think that the Keynesian economics, right, that's the idea of, hey, you're going to spend, the government's going to go into some deficits during bad times to kind of smooth things out. The flip side of that is that you're kind of supposed to run surpluses when things are good.
Yep.
And we just haven't done that since the Clinton administration.
Yeah. Yeah, that's just not in the cards. All right, so we just talked about having a great November for the markets, and certainly today looks like a day that, at least right now, is in the green. Got a substantial gain on the Dow. The NASDAQ has not been faring quite as well. Didn't enjoy the same sort of gains we had on the Dow yesterday.
Yep.
And today, But there's lots of interesting dynamics that are, I think, going to drive markets going forward. We'll talk about that
Absolutely
when we come back with Jeremy Nelson, partner at Element Wealth. Funny. We're back in the Element Wealth studio with Jeremy Nelson, partner, at Element Wealth. I wanted to also pass on, I'm looking at it on the screen here, talking about the map that DeSantis pulled up last night, showing the location of feces across the city of San Francisco. My friend Sharon out in Brandon said that's really disgusting. It was, but it was a very effective political prop as he was hammering the governor of California. But that was a pretty good, I think, exhibit of just contrasting views there, especially from an economic perspective.
Yep.
You got one state with no income tax, another state with extremely high income taxes, second or third in the country. You got one state that has a surplus without an income tax, and the other state that has huge deficits with an income tax.
And losing people because of it.
Right. One state gains 400,000 or 500,000 people, the other loses 1 million. Yeah, so, and it's a shame because you and I both know California's actually a wonderful place. It's beautiful. It's incredible.
Look, I always enjoy my trips there.
It's awesome.
It's a beautiful state. I love the Pacific Ocean.
Yeah.
San Diego is one of my absolute favorite cities.
Unbelievable.
Yeah.
And, I've spent a lot of time just for business in what's called the Inland Empire, the Anaheim area, east of Los Angeles and Orange County, which is somewhat conservative, and it's where McCarthy's from, up just north of that, Bakersfield area. But unbelievable business in that area. And that Orange County area is incredible.
So I don't think it's something that we just can hardly fathom.
I remember visiting with a prospect, an IT prospect we were looking at acquiring, and I happened to be just in the waiting area, waiting for management to come get us, and there was an Orange County Business Journal on the table there. Mm-hmm. I pulled it up, flipping through it, and it was listing the companies based, by the way, in Orange County. And it was listing them in order of gross revenue. Mm-hmm. 80 companies with more than $1 billion of revenue based in Orange County. Yep. I can't even comprehend that when you think about it. And in real estate expansion going all over the place. I'm digressing a little bit, but it's a big place, and it's not all bad. It's just that most of the time what we get here is the bad news. And there are great areas that, unfortunately, due to bad government, have deteriorated considerably. Yeah. And it's a shame.
Was it John Wayne International Airport? Is the Orange County one?
Orange County. Yeah. Best airport in the country.
I love it.
It's the best airport in the country. Yeah. It absolutely is. It's awesome. And the thing, there's like 3 million people there. Mm-hmm. It's as big as the whole state of Mississippi in that area. But it's a shame that it has deteriorated, and Newsom did his best to try to defend his policies, but I think DeSantis very effectively called him out on it. All right, so back to the market. This interest rate thing, which, of course, Powell was talking today. I can't remember where he was, but he basically said, you guys are getting a little ahead here. We're not at the point where we think we can start cutting and pivoting on rates. But ING, an economic think tank, I guess you could call them, or an analyst, ING Economics, just yesterday predicted 6 cuts next year, starting in the second quarter. James Knightley is their chief international economist, said that cooling inflation and a cooling labor market are the reasons they foresee the Fed pivoting and starting to roll them back.
So basically what they're forecasting, if you're talking about getting 6 cuts next year, they're really forecasting that the economy is going to deteriorate, right? That this 5+% in the third quarter was kind of a sugar high thing, that it's going to really, really deteriorate as we go throughout next year. That's probably a little bit aggressive. I do think that the labor market is going to begin to cool. What will probably happen is one company will come out and they'll be the first one because no one wants to be the first one, because if you're cutting, it's signaling to the market that you're having some problems.
Yeah.
There'll be one big company, one bellwether that'll do it, and then it'll start, coming in spades.
It's usually what happens.
So it'll happen over and over and over. And what ended up happening, like with the tech companies cutting last year, they kind of overhired through COVID, and then it was just they started dropping the hammer, and it was one after another. Apple, Meta, Amazon, all of them ended up doing it. So I think that's what will start to happen next year. It's all just been a little bit delayed. This cycle's lasting longer than most people, including myself, expected. I thought that we would have been there by now.
Yeah. Well, an example is Salesforce.com. That posted unbelievable results, and they attribute that to some of their cost cutting and shedding some labor they didn't think they need, and kind of shifting their focus around on their business lines. But typically, those guys are the first to cut, first to hire back.
Yeah. Well, and I always talk about this, that look, down cycles, these or recessions, as painful as they are, they're not the worst thing in the world, because you eliminate the excess and you come out a better company through that. Yeah, that's absolutely right. It kind of forces you to make the decisions that you've sort of been putting off and knowing you needed to do, and that's because when times are good, you say, well, I just put that off, especially when it comes to letting go of people. Oh, look, we never want to do that. Nobody naturally likes firing people and upsetting their households and the stress that creates. But so you're right. We put that off, and then it finally gets to a point where it just has to be done, and you got to rip the Band-Aid off. Yeah. The Magnificent Seven, as they are called, they have been fueled quite a bit by the AI revolution. It's hard to believe, but it's really only been a year since ChatGPT, the generative AI technology, was introduced. But that's just one form of AI. But we're going to see this really embedded and be injected into almost all industries, and they're going to benefit. So I am really, really bullish about AI, but in a different way than people think. See, labor productivity is the backbone of economic growth. AI is the first thing since the smartphone and the computer that is really going to change the curve on labor productivity, right? So if as a worker, if I can produce more, I'm going to make more money. Right. If I make more money, I'm going to spend more, right? So I'm a big advocate of AI, and I think that it's going to make businesses better. Where I'm really actually bullish on it is not necessarily who the winners and losers are going to be in the development of the AI, because I think a lot of that is overvalued. And look, I'm not smart enough to know which one's good and which one's not, right? Yeah. And what's coming down, I have no clue. But where I'm really bullish is that if I go into old school businesses that are profitable, that pay dividends, that are cheap in the market today, that are going to take this technology and implement it into their businesses to be more profitable and more productive, I'm very, very bullish on that. So, my outlook about AI is a little bit different. I don't want to chase the tech stocks, right? Because I think that they're expensive. I want to go find those companies that are profitable today, that have, good balance sheets, moats around their business, that are going to take this new technology and make themselves better. Yeah. And there are lots of ways to play in that regard. One thing that, as you well know, a lot of investors have shown a lot of interest in is NVIDIA, because they're the guys that right now are the primary maker of the chips needed to produce AI applications and the technology itself. So my concern there is, one, China, right? Yeah. Now, this is not a recommendation to buy or sell NVIDIA. Yeah. But my concerns there are, one, China. Yeah. This is a big issue. So national security around AI is going to be a big topic. We're going to be talking about this for years and years to come. So two is how many orders are kind of double and triple orders or demand being pulled forward, especially because of what happened with chips during COVID. But also, here's a company that just absolutely blew out its numbers, and it's down. Yeah, I saw that. Right? Well, because what's the multiple on it now? It's ridiculous. It starts getting crazy. And then also competition is going to come fast and fierce, right? So I'd rather kind of look and say, what are businesses that are going to be able to benefit from all of this technology and implement it and be more efficient? That's where I like to play.
Yeah, I agree. And so I think there are going to be lots of doors open there in ways that we probably hadn't even thought about. I think you're right. There are going to be some sort of old guard, old line industries that hadn't really considered how AI will impact them in a positive way, and there's going to be some upside in that.
Yep.
Yeah, I agree. Jeremy, always good to see you. Appreciate you coming on.
Always a pleasure, my friend. Thank you.
Jeremy Nelson, partner at Element Wealth, has been our guest in the Element Wealth studio on middays. We're coming right back. Half an hour left in the program.